Forget everything you think you know about energy forecasts. What you're about to see isn't a prediction. It's basically a confession from the world's most dominant uranium producer, and the market is completely missing the real story. The entire foundation of cheap energy just cracked.
Okay, look at this. Seriously. Burn this image into your memory. This chart is the exact moment Kazatomprom quietly announced they are killing cheap uranium forever. And you know what? They're not telling you the real reason why.
So what are we really looking at here? This isn't just some quarterly production update. This is a 30-year strategic pivot, and they've disguised it as a spreadsheet. It's a formal policy announcement. And that new policy? It's managed scarcity.
On the surface, it seems simple enough. You've got Kazatomprom. They control a whopping 40% of global supply, and they're cutting back. You can see output peaking around 2025, and then it's just a long, steady decline, basically a cliff. They aren't just tweaking numbers for a quarterly report. They're trying to preserve the long-term value of their assets. But here's the critical line they buried in the notes. They have no flexibility. The old argument that they'll just flood the market if prices rise, it's dead. This is the bedrock for $100 plus uranium, period.
Now what's fascinating is how the consensus is reading this. They're walking right into a trap. Let's break down the hidden meaning, the stuff they are definitely not advertising.
The old story, the lazy take, is that this is just a tactical move to juice the spot price. But here's the blind spot, the part everyone is missing. The real story is that this chart signals a permanent, irreversible loss of supply certainty. This isn't about a shortage of atoms in the ground. It's about a fundamental shortage of trust.
And let me be clear, this isn't a story about a supply shortage. It's a story about a reliability shortage. And for a market that powers nuclear reactors, believe me, that is infinitely more dangerous.
To really understand why this is happening, you have to understand ISR mining. It's the tech that made uranium so cheap. You just pump acid into the ground, dissolve the uranium, and then pump it out. Pretty brilliant for lowering costs, but it created this hidden, fatal fragility in the system. And right now, that system is breaking.
All right, here's the technical secret they will never tell you on an investor call. When you pause an ISR mine, you don't just save the uranium for later. You actually permanently damage the well field. The geology changes, the pressure shifts, and your future recovery rates drop forever. This means higher prices. And here's why. Every single one of those deferred pounds just became less reliable and a heck of a lot more expensive to extract.
The market is treating these deferred pounds like they're guaranteed inventory, like cash in the bank. They're not. They are high-risk, high-cost call options on future production. And the fact that the market is completely mispricing that risk is the entire opportunity right here.
And if you know where to look, the proof is right there. Their older well fields are consistently underperforming the geological models. Their asset constraints aren't just about supply chains anymore, they're about diminishing returns. And just look at that production curve again. It's a smooth, managed decline. That is the signature of resource depletion, not market gamesmanship. They can optimize the decline, sure, but they cannot fake it.
This collapse in reliability, it creates a feedback loop that permanently rewrites the rules of the uranium market.
For 20 years, Kazatomprom was the market's relief valve. They were the swing producer, the guarantee that prices could never get too out of control. Well, that function is now broken, ripped right out of the wall, permanently. The pressure has nowhere left to go.
And the utilities? Oh, they know this. They see the reliability vanishing, and they are quietly panicking. They're overcontracting, scrambling to lock in any secure supply they can find, sucking all the flexible pounds right out of the system. Let me say that again. Utilities are acting now.
So what does all this system pressure mean? It means the old price ceiling is about to become the new floor. $100 a pound isn't a target. It's the starting point for this new reality. It's the price you pay for certainty.
Because uranium no longer clears at a single price, the market is splitting in two. You have Tier 2 pounds, that's the spot market, which is about to become a volatile, unreliable sideshow. And then you have Tier 1 pounds, guaranteed, long-term contracts. This is where the real price discovery is happening now. Contracts are the new gold.
So how do you position your portfolio? Because this isn't a crisis. This is a massive, asymmetric opportunity for anyone who understands this structural shift before the rest of the market is forced to wake up. Let's be perfectly clear. The market isn't repricing the metal. It's repricing certainty. It is pricing the absolute guarantee of delivery for a nuclear reactor. And that is a much, much more explosive event.
Here it is, the core revelation. For 2 decades, the assumption of reliable, abundant supply from Kazakhstan was an invisible subsidy on the entire nuclear fuel cycle. It kept prices artificially, unsustainably low. Now that subsidy is gone. The market's relief valve is broken, and the primary supplier is in a managed decline. So let me ask you, what do you think happens to the price when the market finally figures all of this out?